If you are staring at price all day, you already know that Bitcoin is on sale today, at least in relation to its recent highs. And perhaps more importantly, it is just in time for our weekly DCA stack. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, buenos dias, morgen, and welcome to episode 177 of the Bitcoin Bulletin Podcast. It is yet another stormy day here on Florida's Space Coast, which is ironic because this is actually the first rain we've had since last DCA Wednesday. It's not unusual to have afternoon thunderstorms here. I mean, this time of year you can almost set your watch by them, but the ironic part is that the storms hadn't materialized recently, except for when I've been recording this podcast. And oh, what a week we have had since the last Bitcoin Bulletin Podcast. Of course, this weekend was the Baltic Honey Badger Conference in Riga, Latvia. And I really don't do the conference thing, but that is one of the few that I would really, really love to attend. A lot of exciting content there. Plus, I hear Riga is just a gorgeous city. I've never been to Latvia, but I intend to go to that conference one day. One of the things that I don't like about conferences is that every time there's a major conference, a lot of my favorite podcasts are off the air because, of course, all of the podcast hosts, or a large portion of the podcast hosts, are at the Baltic Honey Badger Conference. So if you didn't know that it was Baltic Honey Badger and you're wondering where some of those podcasts went, have no fear. They were just busy partying and having a good time in Riga. Of course, besides those festivities, we also had much more drama in Europe as countries in the EU have continued their war on free speech. And of course, big tech also appeared to renew their war on Bitcoin content. And of course, the 58K gang is back in the limelight, enjoying another 15 minutes of fame. But before we dive into all of that and more, let's take our customary look at Bitcoin's vital statistics. At the time of this recording, we were at a block height of 858,872, and Bitcoin is ringing in at a US dollar value of 59,020 US dollars per Bitcoin, or 1,694 sats per dollar. And Bitcoin's current price gives it a market capitalization of $1.17 trillion. Obviously a little bit cheaper than last DCA weekend because we've had the price retrace a little bit, but still above the 1.16 trillion from two Bitcoin Bulletin podcasts ago, or the 1.08 trillion back on August 7th. So all things are relative. If you zoom out, just like the price, market cap, for obvious reasons, is also trending up and to the right, and still, most importantly, above that all-important magic number, that $1 trillion that the normies like to see, that makes Bitcoin feel to them more like an actual serious asset or serious currency, as opposed to just another altcoin. For those of you who value your wealth in shiny yellow rocks, one Bitcoin will currently cost you 23.6 ounces of gold. They say you get Bitcoin at the price you deserve, and while we've had a slight pullback from last Wednesday in the number of round Peter Schiff bucks, little yellow coins that it would take to purchase just one Bitcoin, that number also is still continuing to trend up and to the right as gold is demonetized by Bitcoin, as gold continues to trend down and to the right in Bitcoin terms. But for those of you who value your wealth in pizza, one Bitcoin will currently purchase you 3,300 large pepperoni pizzas from Papa John's. That is one pizza a day, every day for more than 9 years if you were trying to spend your Bitcoin on pizza. For those of you just following us, if you don't know why we mention the pizza metric every DCA Wednesday, that's a tip of the hat. It's a nod to programmer Laszlo Hanya, who did the first real-world Bitcoin transaction back on May 22nd of 2010, when he purchased 2 Papa John's pizzas for a whopping 10,000 Bitcoin. And I mean, if I say zoom out and have that long-term mindset, the low time preference, but just looking at that statistic, we have come a long way. And of course, if you're not new to this podcast, you've heard me say that we've kind of reached a Bitcoin pizza singularity, where I don't think if you had one Bitcoin, you could ever spend it purchasing just one pizza a day, because that 9 years is more than two halving cycles from now. So Bitcoin's going to go through a couple of more face melting bull runs between now and then. So, for example, we have no idea where Bitcoin's going to go this fall or next spring before it sets its cycle all-time high. And then we would have the 2028 halving and the face melting bull run that will probably occur as a result, and then the 2032 halving. So we will rapidly get to the point where it would not be possible to live long enough to spend all of your Satoshis just on one pizza a day. I mean, who knows at what point in time we're going to reach the point where instead of reporting how many large pepperoni pizzas you can purchase from Papa John's, we'll be talking about how many Papa John's restaurants you can purchase for just one Bitcoin. I mean, I say that kind of tongue in cheek, but one day, obviously, that will happen. It doesn't cost $1 million to buy a franchise of most restaurants. So when Bitcoin hits $1 million, we will have to revisit that metric, because it'll be really silly to be talking about hundreds of thousands of pizzas. That metric that has been my favorite metric for most of this podcast, Bitcoin's 24-hour average transaction rate, is doing something a little different today. For almost the entire history of this podcast, every time we have seen transaction volume up, Bitcoin price was trending up. And when we'd seen transaction volume down compared to the last week, the price of Bitcoin was down compared to the last week. Currently, we're looking at 9.21 transactions per second on chain. I think that has got to be the highest I've ever seen it. I'm looking at an overview of my notes right here, and I don't see anything anywhere near that high. But yet, of course, if you look at the price of Bitcoin compared to last week, the price of Bitcoin is down. And of course, this isn't any kind of serious transaction analysis. I think all transaction analysis is hooey. It's smoke and mirrors. It's rolling bones. It's voodoo science. It's just a guess, because nobody has a crystal ball. And maybe if you're looking at companies and you know how much money they're earning, and there's some solid data that you're crunching, you could present a little better picture of why you can use transaction analysis to determine whether a stock is overperforming or underperforming. But when it comes to Bitcoin, every 4 years, Bitcoin has to establish new price discovery because the supply shock of the halving, and it's just, Bitcoin is still so underutilized by the general population that that just nobody knows what Bitcoin's going to do at this point in time. And even if you thought you had a handle on it, Bitcoin's a relatively young monetary asset, a relatively young financial asset, a relatively young language, protocol, method of exchange. It hasn't been around long enough before people can really draw too many conclusions. And we've only had a handful of halving cycles. And so even when I say I expect the same thing to happen or a similar thing to happen this halving cycle that I've always expected, really that's just an educated guess as well. Although, because when I mentioned earlier that people that take earnings reports and that they use that as kind of hard data to do their transaction analysis on stocks, we do have absolute hard data on how many Bitcoin will ever exist. We have absolute hard data on how many Bitcoin will be awarded for each block up until the next halving, and then after the next halving. That's all set in stone. So I'm getting way out on a tangent here. I just think that the 24-hour on-chain transaction average is a fascinating statistic, and I really don't put any credence into it other than that it's been fun to watch what Bitcoin's on-chain transaction history is doing, and noticing anecdotally that it has had some sort of correlation with Bitcoin price, at least during the last 3 years of this podcast. And of course, correlation is not causation and vice versa, but it's interesting. It's an interesting metric, and we'll continue talking about it every week nonetheless. Speaking of on-chain transactions, this metric tells a different story, because while on-chain transaction averages are through the roof, the mempools are looking a little less clogged than last week. So, for example, last week, Clark Moody's mempool had 176,688 transactions pending, and this week they're only showing 116,225 transactions. And even mempool.space, with its larger mempool, has shrunk from 264,432 transactions to 218,212 transactions. Of course, that it takes a while to clear those transactions out, since we only get one new block every 10 minutes or so, and because a block can only hold so many transactions, it would take quite a few blocks to clear those out. So even if we did have a spike in on-chain activity, it would take a while for that to reflect in mempool bloat. And I guess I kind of said that a little backwards as well. It's been an interesting day, folks. I've got a side gig. It's kind of funny. Bitcoin's really, it's not my, this podcast is really the hobby. So I jokingly refer to my real life as a side gig, but my real life has taken more of my time than usual. Maybe I'll dox that one day because it's actually kind of interesting. At least a lot of people find it interesting. I know a lot of people that appreciate what I do besides my Bitcoin work. Let's just say I'm involved in a business activity that's been reasonably popular, fairly successful. But recently, we've been working on making an update, not necessarily a change. Just I'm getting into more than I feel comfortable discussing right now on this podcast, but it's kept me really, really, really busy. Everybody that I'm involved with in that endeavor knows not to bother me on Wednesday afternoons when I'm doing my DCA Wednesday podcast. My phone's been going nuts anyway. So that's just a sign that there's a lot going on. So if I appear more distracted than usual, and I know that's kind of funny because I seem to be distracted all the time, there's a lot going on. But I'm excited to be here. I'm excited that Bitcoin is on sale, kind of. It's not really on sale if you if you consider how just a year ago it was half of what it costs right now to purchase just one Bitcoin. We've got 100% return in the last 12 months. So while it's funny because they say Bitcoin changes you, and it certainly changes your mindset because people get almost immediately used to whatever the new higher price of Bitcoin is, even if it's not an all-time high, because the all-time high was months ago. And then we've done this thing where we've fallen into the 50s or even lower after an all-time high. And then we go back up. And so we were up as high as 70, and then we went back down, and then we were up into the 60s, 62, 63, whatever. And then it goes back down into the 50s. And even though in general, Bitcoin is marching up and to the right, you mentally, and I'm guilty of this as well. You see that higher price, and then it does seem like the price of Bitcoin is down when, if you just zoom out, it's just insane to think of even $59,000 Bitcoin a few years ago. I mean, even a cycle ago, we started that cycle at, less than $10,000, and then Bitcoin, or I guess I'm thinking 2 cycles ago, we started at around $3,000. Oh, I think $3,000 was the cycle low. Went all the way up from $20,000 to down to $10,000, and as low as $3,000. And that's when that meme came out: Bitcoin, please go to moon. Stop going sideways now. Do 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 do. Tombazi say we going down to 1K, but Mr. Novogratz says we have bottomed out. Do, 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 do. So we went down as low as $3,000 at one point before exploding to where we are right now. That was a heck of a tangent because I'm not even through Bitcoin's vital statistics. So it looks like mempools are clearing out a little bit. And as a result, if you do need to make an on-chain transaction, what it will cost you to make an on-chain transaction has gotten a little bit cheaper as well. For example, if you need to make an on-chain transaction, Clark Moody's fee estimator is saying that you only need to spend 3 sats per VByte for even the highest priority transaction, that should be mined pretty much in the next block or two, and that even if you want to wait a day, 3 sats per VByte is still the recommended transaction fee. And then the lowest they're recommending is just 1 sat cheaper at 2 sats per VByte, and they're saying that'll take up to a week. Mempool.space often tells a slightly different story. They're saying it got a little bit more expensive to do a priority on-chain transaction this week. Last week they were saying just 4 sats per VByte would be mined in the next block. And today they're saying it will take 5 sats per VByte to guarantee a high priority transaction is mined in the next block or so. And that works out to about 41 cents in US dollar terms, which is still really cheap. I am looking at mempool.space right now, though, and it has been 20 minutes since the last block had been mined. They had been screaming in, and they've slowed down for this block, which happens. Blocks come in at an average time of 10 minutes, or at least that's the target, is to average at 10 minutes. And even when things are functioning well, sometimes blocks take an hour to come in, and sometimes we get 2 blocks simultaneously. It's just random chance, basically. There's difficulty involved, but it's a lot like flipping a quarter. Sometimes you're going to get 2 or 3 heads in a row and then 1 tails. But if you flip that quarter often enough, you should get half heads, half tails. And so we should, on average, end up with a block every 10 minutes. But right now, this last block has taken over 20 minutes now. So previously, fees on mempool.space were a little bit lower. So the fact it's higher this Wednesday than last Wednesday is kind of unique to the last several minutes. But either way, 5 sats per VByte still works out to just 41 cents. And that's the cheapest you could send money anywhere in the world almost instantly, with nobody, no bank, no intermediary that can tell you can't do it, or that you can't send money to a specific person or wanting to take their cut. Again, getting off on a bit of a tangent here. Speaking of Bitcoin mining and blocks, we have just had in the last, it looks like 66 blocks, a Bitcoin mining difficulty adjustment. The mining difficulty that it takes to find a block is adjusted every 2016 blocks, which theoretically works out to about every 2 weeks. And with that goal of keeping one block coming in on average of once every 10 minutes. Now, as I was mentioning, they're basically essentially doing the equivalent of flipping a coin, 2016 blocks. And if they don't have 1,008 heads and 1,008 tails, then they make a tweak. In this case, the blocks come in at an average of 10 minutes. If they're coming in a little bit slower, they make it easier to find the next block. If it's coming a little faster, that difficulty increases. And that is what happened. 56 blocks ago, we had the difficulty increased by 3% because blocks were coming in just a little too fast. Currently, it's looking like the next difficulty adjustment is going to be on September 10th. That's almost exactly 2 weeks from now. I guess it's a little sooner than 2 weeks from now, Tuesday, September 10th, because we're 1,960 blocks away. That is too soon to tell if it's going to be a difficulty increase or decrease because, like I said, we've only had 56 blocks. They were screaming in, and now we've just had this one really slow one. But if you must know, blocks have been averaging 7 minutes and 55 seconds. So if that were to continue, we'd be looking at a relatively heavy-duty difficulty adjustment. But I think it's too soon to tell. That's just the luck of the draw at this point in time. A much more reliable metric is Bitcoin's estimated hash rate securing the network, and that is actually looking like it has decreased slightly since last DCA Wednesday. Last DCA Wednesday, it was estimated that there were 628.1 exahashes of mining power securing the network, and now that estimate is 608.4 exahash. So a decrease of almost 20 exahash, just about 20 exahash. So if that were the case, you would expect blocks to slow down and there to be a mining difficulty decrease. We won't know until it happens. Maybe next DCA Wednesday we'll get a better idea. But even then, we've seen things change radically just in the span of a few days. For example, if there was a heat wave in Texas and the large miners were to shut their miners down to sell power back to the grid, that results in a substantial drop in hash rate, which would slow those blocks down artificially for a day or two. Or if all of a sudden a big miner brings a new mining farm online, that could increase the hash rate. That would increase the hash rate and could decrease the block time, and then that would increase. That would result in a difficulty increase. So we just won't know until it happens. But that's one of the most genius aspects of the Bitcoin Core protocol is this mining difficulty adjustment that keeps things humming. Tick-tock next block, regardless of the weather or the political forces trying to tinker with Bitcoin miners. Bitcoin just keeps going. Last halving cycle, we had the China miner ban. And if you haven't been around long enough to remember that, the vast majority of mining used to take place in China, and then China banned miners, and they all had to relocate. So a large portion of them, some of them are still mining underground or with tacit approval by their local party officials, but most of them had to pack up their miners and relocate. And since then, a large portion of that has relocated to the United States, which now leads the world in global hash power. But my point being that China waged a major attack on Bitcoin mining, and all it did was make more miners show up in Texas and give the United States more of the mining revenue. The Bitcoin still went on to set an all-time high. We still had the halving, and we are heading towards the next face-melting bull run and TikTok next block. Real quick, I want to take a minute to thank those of you listening on your favorite podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to support this podcast through the value for value method by either streaming sats on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out, a boostergram, a message, via the Lightning Network. So since it's a Lightning transaction, you can not only say hi or let us know what's on your mind, you will also be sending Satoshis, which allows you to give back some of the value that you feel you're receiving by listening to help support the podcast. Besides being able to support your favorite podcasts, Fountain also allows you to earn Satoshis for listening to your favorite podcasts. Although I say this with a hint of caution because it is allegedly random that they assign whether you're going to earn Satoshis at the beginning of the day and how many Satoshis you're going to earn for your first few minutes. But I have not actually earned any Satoshis, I don't think, in the last week at all. And I listen to podcasts almost exclusively on Fountain. So I definitely haven't received any Satoshis since they did the latest update where they've integrated it with Nostr, which is really cool. And I highly recommend you to listen to your favorite podcast on Fountain. Why support big tech, right? Why support Google? Why support Amazon or Apple or Spotify? Why feed the big tech monsters that are actually anti-Bitcoin when you can support projects like Fountain or Breeze or whatever your favorite podcasting 2.0 app is? Either way, in theory, you should be able to earn a few sats here and there for listening, and you can contribute some of those sats back to your favorite podcast as a way of saying thanks and contributing value back for the value you feel that you've received. We do not have any boosts to read this week, but when we do, we read those boosts on the next episode of the Bitcoin Bulletin Podcast. But thank you to all of you who have been supporting the podcast in the past. And speaking of you listeners out there, our geographic distributional listeners has remained completely ossified for yet another week. And it tends to do that. We tend to see changes every once in a while, but maybe once every month or two. And then things seem to stay the same for months at a time. I don't know. I don't think that has anything to do with the way the statistics are calculated, the data is presented, because other statistics are updated in real time. So I think it's just the fact that we're not in a euphoria phase. So most podcasts, this one included, aren't picking up a ton of new listeners. Sometimes when the price of Bitcoin goes down, you even lose listeners. That has not been the case recently for us because things seem to have remained absolutely the same. But our top 10 countries for listenership remain as follows. Number 1 remains the United States, where a little more than half of you are listening. So thank you to all my fellow plebs in the United States. Number 2 remains Argentina. So once again, muchos gracias, amigos, in Argentina. Number 3, as has been the case for months and months, if not years, remains Germany. So Dankeschön, mein friends in Deutschland. Guten Abend. It's because it's evening here. It's Guten Nacht in Deutschland, I suppose. But it is solidly early evening, or early. I guess the sun is still out here in sunny, kind of sunny, cloudy Florida, I suppose. Number 4 remains Canada. So those of you listening up north, a lot of you, maybe not you listeners, but a lot of Canadians are getting ready to think about making their way down here to Florida for the winter. We get a lot of Canadian visitors. They're called snowbirds, if you're not familiar with that come to the sunnier places in the United States to spend the winter to get out of that snow. Then they leave when it gets really hot, when the weather gets gorgeous in Canada. So we are starting to see Canadian license plates show up at the grocery stores and at the beach again. But really that influx doesn't happen until the first really good snowstorm. And I think that's when people say it's time to pack up and move. But either way, whether you stay put in Canada or whether you're going to come down here and join us in Florida, thank you to those of you listening in Canada, the number 4 country in the top 10 listeners. Number 5 remains Luxembourg. So Dankeschön, mein friends in Luxembourg, or Morien to those of you listening from Luxembourg who speak Luxembourgish. Number 6 remains Spain. So hola, muchas gracias amigos in Spain. Number 7 remains Colombia. Hola, muchas gracias amigos in Colombia. Number 8 remains Mexico. So hola, muchas gracias amigos in Mexico. Number 9 remains Australia. So g'day mates to those of you clinging on down under where gravity reverses itself and you're on the bottom half of the earth. I'm kidding. It seems like you're on the bottom of the world, and that's all just perspective, I guess, based on magnetic north or where you're looking, because we're here on the Space Coast, and so our astronauts get to see Earth from a different perspective, and they haven't seen it from beyond Earth orbit in 50 plus years. But we're getting ready to do that again before the not too distant future. We had that unmanned mission where the Orion capsule went out around the moon and came back and sent absolutely spectacular pictures of Earth from a perspective that man has not seen in more than 50 years, at least we're going to do so with human eyes before too terribly long, and then up and down our relative concepts, because depending where you are in space, you're looking at a different portion of the Earth. Again, a complete tangent, but I'm also kind of a space nerd in case you didn't figure that out. Part of the reason I find myself here in Cocoa Beach, Florida, just 16 or so miles away from the launch pads up at Cape Canaveral and Kennedy Space Center. Number 10 remains the United Kingdom, so thank you to all of our cousins across the pond in the United Kingdom. That wraps it up for the top 10, but I know that there are listeners in almost every country around the world out there because I can see this data in much, much more minutia. So it's really, really super flattering that you're listening to this podcast tonight, wherever you may find yourself, and that's really cool. Bitcoin is a global phenomenon. Bitcoin is for everybody, and it's flattering that literally everybody around the world, regardless of where you are, there are friends, family members, or plebs of yours that are probably listening to this podcast. On to the news. So it seems like anytime the price is either up or the price is down, or even when the price is sideways, the news tends to be the price and the price tends to be the news. Whether you're talking about the bull market, the bear market, the winter, or the crab market, everybody is obsessed with price. So some of the headlines yesterday and today have been like Bloomberg's headline: Bitcoin falls below $60,000, Ether sinks in crypto market wobble. It has been interesting to note as the price of Bitcoin goes down. When Bitcoin goes down 2%, we've seen the altcoins go down by 4 or 5%. When Bitcoin's down 6%, they're down 10 or more percent. That's one of the reasons a lot of Bitcoin maxis actually cheer on bear markets or price drops, because it's a lot harder on the altcoins, the scam coins, the S coins, than it is on Bitcoin. And if you if you're not a maxi and you believe that there are alt cases that have their use case, you could still probably agree that the vast majority of the altcoins are scam coins, and it is certainly good to see the pumpers not be able to rake people over the coals when their coins are losing value. MSN ran the headline just a few hours ago: cryptocurrencies tumble amid wave of long liquidations as Bitcoin falls under $60,000. And as we mentioned, Bitcoin's right around $59,000 at the moment. And I don't want to get too repetitive, but I have dedicated a large portion of several of the most recent episodes of the Bitcoin Bulletin Podcast to discussing precisely why I think the price of Bitcoin is actually higher than it normally would be at this point in what we would consider a quote-unquote normal cycle. Obviously, history doesn't repeat, but it rhymes. And I'm going to go into that a little bit more detail in just a few minutes. I'm kind of starting to get ahead of my notes here, but most importantly, I want to remind you that while normies are panicking about the price, Wall Street continues to load up. Wall Street is literally soaking up the Satoshis that are slipping through the fingers of the weak-handed. It is too early for today's numbers because the sun isn't even down here in Florida yet on the East Coast of the United States. And the markets have been closed for several hours, but a lot of this data trickles out closer to midnight, later in the evening at least. But on Monday alone, BlackRock saw more than $224 million worth of inflows into their spot Bitcoin ETF. That means BlackRock, which is the largest asset manager in the world, now controls about $21 billion worth of Bitcoin, and they are not slowing down. So while normies are panicking about the price of Bitcoin, and some of them are selling, Wall Street is not. Now, this is one of the things that people were worried about with the ETFs. They figured because ETFs are for normies, the normies would be more weak-handed, and then when the price of Bitcoin went down, everybody would dump these Bitcoin ETFs, and that would negatively affect the price of Bitcoin. And so far, we've not seen that. And we've had several up and down cycles since the spot Bitcoin ETFs were approved. I mean, we had the cycle all-time high, or the previous cycle now, the late cycle all-time high. And several times we've gone back up to either the high 60s or the 70s, or even just the low 60s, and then back down into the 50s. And that has not shaken out really much Bitcoin at all from the ETF, specifically not from the BlackRock ETF, which hasn't really had any outflow days at all. I mean, there's probably been days when people have net sold, but it's never been enough that they went to where they actually had to liquidate any of their Bitcoin. As a result, BlackRock is rapidly becoming one of the largest holders of Bitcoin, having more Bitcoin than even Michael Saylor and MicroStrategy, and continuing to outpace them as normies panic. Do not sell your Bitcoin to BlackRock. I cannot stress that enough. There's only ever going to be 21 million Bitcoin ever in existence, and every Bitcoin that goes into the black hole of BlackRock is never going to come out again. And that is Bitcoin that plebs can't use as money. I've got headphones on. I'm talking into my good microphone, but I'm not in my studio. I actually have I'm actually at home, and I have I've got a different microphone stand rather than the nice boom arm that I have set up at my desk, but it is my nice mic and my nice soundboard. And I can hear a parrot screaming through my headphones. So if you hear a shriek, we have a parrot. Xander is his name. He's an African red belly. And he has decided that if he doesn't get what he wants, instead of saying something fun like begging for a treat, his name is Xander, so we call the little Nutriberries, we give him Xander berries. So often you hear him say Xanderberry or hello, or he likes to play peekaboo. But if you're not paying enough attention, like a 3-year-old, he just shrieks, just as loud, shrill, earring as possible. Parrots are noisy. Xander is really noisy when he's throwing a tantrum, and he's throwing a tantrum in a different room on the opposite end of the house, but I can hear him bleeding over my headphones. So I apologize for my parrot. They say parrots have the mentality, the intellect of a 3-year-old, and I firmly believe that's true. Xander's 22 years old now. We've had him a really long time, and I can vouch for the fact he has about the intellect of a 3-year-old, having had 3-year-old humans and 3-year-old birds and 21-year-old birds in this household, and he's certainly behaving like one tonight. So I apologize if you hear that shriek. Hopefully the noise canceling I run post-production will get rid of it, but it's definitely bleeding over right now because it's really, really piercing in my headphones. So speaking of not letting BlackRock soak up Bitcoin, and speaking of the tremendous on-chain activity we've had, an interesting occurrence is going on. Cointelegraph ran the headline yesterday: Bitcoin exchanges are witnessing the third biggest net daily outflow of 2024. Bitcoin buyers scoop up 45,000 Bitcoin in less than a day during the latest BTC price retracement. Now, I'm assuming they're not including the Bitcoin that BlackRock is scooping up, because the ETFs tend to buy from OTC desks, but of course some of those OTC desks are operated by exchanges, so maybe that data, some of that is reflected here. But I'm going to be optimistic, and I'm going to say that while some of the newbies might be panic selling, and while some of the OGs continue to sell because they've had Bitcoin since the very beginning and they live off their Bitcoin, so they out of necessity have to sell some Bitcoin from time to time. Mining companies have to sell their Bitcoin to pay the bills. It appears that the average pleb is not only soaking up Bitcoin, but transferring it off of exchanges. The outflow of exchanges is what's optimistic, is what's really heartening about that headline, because you should not keep your Bitcoin on an exchange. Even if you're not selling, even if you're not weak-handed, even if you're not panic selling, keeping your Bitcoin on an exchange is traditionally how normies, plebs, people of all walks of life lose their Bitcoin. When you get Mt. Goxed, or you get FTX'd, the exchanges go bankrupt, or they just or like Quadriga in Canada, where the founder died allegedly, and he was the only one that had the keys to their Bitcoin wallet, so all the Bitcoin is allegedly gone forever. How most people are going to get hosed out of their Bitcoin is by an exchange either collapsing, going bankrupt, or rug pulling them altogether. And if you don't keep your Bitcoin on an exchange, if you keep your Bitcoin in a hardware wallet in cold storage, that cannot happen to you. So if you have any Bitcoin on an exchange, obviously small amounts, that would just be dust. You wait until you have enough Bitcoin that is worth moving it off an exchange. But if you have any appreciable amount of Bitcoin at all on an exchange whatsoever, you need to get that off. Not your keys, not your coins, right? I'm sure you know that. All right, the 58K gang is just having a blast. I mentioned them in the introduction. If you don't know what the 58K gang is, the 58K gang is basically it's a running meme movement that we're predicting that the forever price of Bitcoin will be 58K, and they kind of had their thunder stolen from them when Bitcoin first surged to its new all-time high of 74,000 or whatever after the ETF approval, or when it was imminent that the ETFs were going to be approved. And the price just spiked right past 58K. They never got any time to celebrate whatsoever, because it was immediately in the 60s. So fast, nobody really even got the chance to even see it go through 58K unless you were staring at the charts when it happened. But since then, they've gotten to party a little bit, because Bitcoin's retraced to 58K multiple times. It's literally become such of a meme that I'm quite frankly surprised that Elon Musk, who is an absolute loaf with Doge because, Elon's a clown and he's a memer, he's an S poster, and 58K Bitcoin has become so meme worthy that I'm surprised Elon Musk hasn't joined in on it and become a Bitcoiner again. And we know he holds Bitcoin, so he is a Bitcoiner, but he doesn't really tweet about it. He tweets about Doge, he mentions Doge, but he doesn't mention Bitcoin. At least he hasn't since the last halving cycle. And we're going to talk about that a little more in just a second. But not that Elon, who is literally not that Elon on Twitter. It's actually eggplant Elon underscore at eggplant Elon underscore on Twitter is the handle, but not that Elon is what they're going by. Tweeted today about what exactly the whole 50K gang is, if you don't know. And they tweeted the Bitcoin. He said, fed up with the 58K gang. Here's an explanation of why Bitcoin always returns to 58K. And this is tongue in cheek, guys. I don't want you to take this seriously. If you've never heard of the 58K gang, this is a joke. It's a meme. They're having fun, but I'm going to read this to you. It's a tweet storm. It's a thread of tweets. The Bitcoin resonance hypothesis posits that 58,000 represents a quantum equilibrium state for Bitcoin's price, caused by a phenomenon known as blockchain resonance. This theory suggests that the cryptographic algorithms underpinning Bitcoin's blockchain have inadvertently created a harmonic oscillation pattern in the digital currency's valuation. At precisely 58,000, the mathematical properties of Bitcoin's SHA-256 hashing algorithm align with the golden ratio, creating a state of minimal energy in the crypto economic system. This alignment causes a subtle but persistent quantum effect that always pulls. I got to click on that. That always pulls Bitcoin back to this equilibrium point. Got a little bit ahead of myself. This effect is amplified by the collective behavior of miners and hodlers, whose actions unconsciously reinforce this resonance through a complex feedback loop involving mining difficulty adjustments, trading patterns, lettuce hands, and BT sentiment. Bitcoin Twitter sentiment. While market forces can temporarily push the price away from this equilibrium, the underlying quantum resonance inevitably reasserts itself, causing Bitcoin to boomerang back to the 58,000 mark with almost eerie regularity. If you found this tweet helpful, I have some beachside property in Montana to sell you. For more fascinating insights into the Bitcoin phenomenon laws, please sign up for my Discord. And then he links his Discord. But that's not Elon, who is at eggplant Elon, at eggplant underscore Elon on Twitter or X, depending on whether you still use Twitter or whether you're caving in and calling it by Elon Musk's new name. In all seriousness, I want to remind you that I've said multiple times now, Bitcoin price action is way ahead of where we would have been during a quote unquote normal cycle without the ETF hype pump. So if you're worried about the price of Bitcoin collapsing, I would tell you that the 2024 halving bull run hasn't even started yet. That the all-time high was because of the golden swan event of the spot ETFs and all the news and all the hype and all the euphoria, and that we peaked a little early, but we didn't peak so early that it had what will affect the upcoming bull run in any way, shape, or form, in my humble opinion. In many ways, other than the fact that the ETF pump happened prior to the halving this time, it reminds me of the Elon Musk, speaking of Elon or eggplant Elon, the Elon Musk Tesla Bitcoin pump that I referenced just a few minutes ago during the 2020 halving cycle. If you're new enough or weren't paying close enough attention in 2020 or 2021 that you don't know what I'm talking about, we saw a double top during that halving cycle because we had an early pump in the spring of 2021, and then we didn't have our normal bull run pump until much later during the fall of 2021. And it's usually attributed to the fact that Tesla announced that it would be accepting Bitcoin as payment on February 8th of 2021. And they did so in a Securities and Exchange Commission filing that stated that Tesla had purchased not only purchased $1.5 billion worth of Bitcoin, but that they would start accepting Bitcoin as a payment method, quote unquote, subject to all applicable laws and initially on a limited basis. Prior to this announcement, the price of Bitcoin had been slowly working its way up from the cycle low to where it was that day on February. I guess it had slowly started working up to where it was on the morning before the announcement was made at $38,886.63. Following the announcement, the price of Bitcoin exploded, reaching $46,196 that afternoon, and ultimately going on to set what would become the first of the two new all-time highs of around 66,000 US dollars. But in response to Tesla's Bitcoin announcement, the anti-Bitcoin haters poured on the heat, threatening boycotts, etc., and using the environmental FUD that was extraordinarily prevalent up until just recently. If you remember the Scala Satoshi and the Bitcoin's going to boil the ocean attack that have largely subsided now. But they used it to attack Elon Musk and Tesla specifically until he finally caved. And then on March 12th, just a few months later, March 12th of 2021, he retreated. He recanted, announcing that Tesla would no longer accept Bitcoin as payment for its vehicles, and citing concerns about the rapidly increasing use of fossil fuels for Bitcoin mining and transactions. This in large part led the US dollar price of Bitcoin to slide to as low as $33,000 before, bottoming out and resuming the regularly scheduled post-halving bull run, which ended up topping out at $69,000 in November 2021, exactly 18 months after the halving, which was precisely in line with what you would have expected from a normal halving cycle. So we had the big pump, we had the big dump, and then Bitcoin still went on to do what it always does after every halving cycle, seemingly unaffected by everything that had happened in the fall or in the spring with the hype around Tesla. So the result of it is we got that double top halving cycle. We got the premature euphoria over the Elon pump, and then we got the supply shock of the post-halving bull run. Maybe that's what we're going to see this time, because that happened after the halving, and our spot ETF pump happened before the halving this time. But in general, it's similar enough to what occurred that I would expect it to work out similarly this year. We're still way too early, for example, to expect the supply shock bull run that we anticipate as part of the halving cycle. If the ETF hype had not happened, we would be looking at the bull run really kicking off, the end of 2024, as I've often said, around Thanksgiving or Christmas, and that the cycle wouldn't peak at its ultimate all-time high until sometime in 2025. So basically, buckle up. We're still early in more ways than one. We're still early in general, and we're still early in this cycle. I don't think the bull run has officially even begun yet. I mean, we did have a bull market by the numbers, but the bull market as a result of the halving cycle, it's stay tuned. It is still on the horizon. It's something I wouldn't have even begin to expect for another several months. Last week, we were anticipating the rumors that RFK Jr. was going to drop out of the race for president of the United States and endorse Donald Trump. RFK's vice presidential nominee, as we discussed, had heavily hinted at this during a podcast interview, so it seemed like it was a done deal, but it hadn't happened yet. Well, 2 days later, on Friday, it was official. RFK Jr. appeared on stage with Donald Trump in Arizona, entering to the Foo Fighters song, My Hero, There Goes My Hero, amidst a thunderous applause in a gigantic arena and even fireworks blasting off on the sides of the stage. And this is a big deal. The 2024 election had been shaping up to be the choice between the pro-Bitcoin administration of Donald Trump, Elon Musk, Vivek Ramaswamy, and now RFK Jr. versus the even worse than the status quo continuation of the Biden administration, becoming the Biden-Harris administration, which has already been demonstrably anti-Bitcoin and anti-free speech, but I believe would get only worse. And we're getting hints of that as Harris makes some of her policies that she's going to pursue public. Hints that maybe Elizabeth Warren might be Secretary of the Treasury, or at least have a bigger role than she currently has. And of course, she's as anti-Bitcoin as it's possible to get in the current United States government. But only imagine if this had happened just weeks prior. If this had happened just a few months ago, literally RFK Jr. could have accepted the overtures that the Trump campaign was making for him to be the vice president, which I believe would have meant hands down that Donald Trump would be the next president of the United States. RFK Jr. would be the next vice president of the United States. Trump can't run again the next election. So that means 4 years later, RFK Jr. would be the Republican nominee for president of the United States and hopefully president, a short time after that. And that would have been amazing. mean, it's always possible JD Vance steps back now and says, "Hey, we're gonna let RFK Jr. take over because it's in the best interest of the party." But that's kind of a pipe dream. I don't see that happening, but it's a possibility. I'm really just talking about this because I'm thinking about what could have been. Could you imagine that ticket? Trump, who has now become pro-Bitcoin. I know a lot of people don't like him, but at least he's, for all his faults, is not going to try and go after and suppress Bitcoin. At least he's promising he's not going to. His advisors, in the form of Vivek Ramaswamy and now RFK Jr., certainly are going to hold his feet to that fire because they're both exceedingly pro-Bitcoin, Vivek being a Bitcoin maxi. And we all have heard what RFK Jr. said at the Bitcoin conference in Nashville. Literally, he couldn't have said anything else that Bitcoiners wanted to hear. I mean, he checked off every box on the Bitcoin maxi wish list. Speaking of the attack on Bitcoin, since the last DCA Wednesday podcast, we had a little bit of drama on YouTube with YouTube banning the Simply Bitcoin podcast in the middle of their live stream on August 23rd on Friday. And this wasn't the first Bitcoin channel that YouTube banned. We had Swan Magazine and Swan Bitcoin and Bitcoin Magazine, among others, previously kicked off of YouTube. Since this has happened, the YouTube has caved in and they have restored the Simply Bitcoin Magazine podcast. But it was all that anybody was talking about as far as the Bitcoin influencers are concerned for several days. And even Canadian Bitcoiners podcast had weighed in on this on their last episode. And this is before YouTube had relented, but they said, be careful what you wish for by making this so public, this fight with YouTube, because Joey heavily implied that he thought the reason that they were kicked off wasn't necessarily for their content, but for the fact that maybe they were buckling to pressure, or someone associated with the podcast or hired by the podcast was fudging the numbers, whether that be paying for bots or whatever to fake their listenership numbers. And he was worried that eventually it would become public, that would happen, and that would backfire on Simply Bitcoin. That did not happen. YouTube caved. And yesterday, Simply Bitcoin tweeted, "Breaking, Simply Bitcoin is back on YouTube. Thank you to everyone that supported us and tagged YouTube to get us back. The show goes on." So I'm glad that happened, because it's one of the most popular Bitcoin podcasts. They build themselves as the most popular daily Bitcoin broadcast, Bitcoin podcast. So by YouTube banning them, that certainly did seem like we were looking at the beginning of another wave of Operation Chokepoint style oppression of Bitcoin content. Speaking of people coming after Bitcoin, Comrade Kamala Harris she hasn't ever released any actual policy proposals. She's kind of running a basement campaign, hiding from the media. We know she's never done a sit-down interview. She hasn't done a press conference. She doesn't even have a policy statement tab on her campaign website. But she has come out and says that she is endorsing Joe Biden's proposed tax increases that he would have been pursuing had he not dropped out of the race. Jason A. Williams tweeted, "Here we go. The unthinkable is being proposed, unrealized capital gains tax." And he's got a screenshot of a Fox News slide that says, "Vice President Harris's tax proposal. Corporate tax rate 28%, currently 21%. Capital gains tax 44.6%, currently 20%. So more than double. But perhaps most damning, unrealized gains tax 25%, currently zero. Doesn't exist. There's no such thing as an unrealized gain. It's money you haven't made. It's paper wealth that can go away. An asset that I spoke about last weekend that you could, in theory, ultimately lose money on, but the government is going to try and screw you and take your money, take a cut of it right now, because they are money grubbing vampires that will try and suck tax money out of you every opportunity they can." Adam back chiming in, "Unrealized capital gains tax is insane. I don't need to beat this dead horse, but Yahoo Finance and the media has been running cover for Kamala Harris on this." For example, Yahoo Finance ran an article titled, "Why Kamala Harris's approach to capital gains is generating so much controversy." Now, this is a total fluff piece. Just listen to the first few sentences of the article. "A top business world, they're leading right off by not people, but business, greedy corporations, right? A top business world critique of Kamala Harris since becoming the Democratic nominee is her endorsement of plans for from the Biden administration that would reshape how the assets of America's richest citizens are taxed." So they're distancing her from this plan, saying these are just plans from the Biden administration, not her. forgetting the fact she is the Biden administration. She's the current vice president. Joe Biden has stepped back. This is her ball game to run now. She is the de facto Biden administration, and she is the nominee for president of the Democratic Party. But the article continues. But these plans, which include the taxation of unrealized capital gains and holdings not yet sold, and I'm breaking in here again, not only not yet sold, you haven't made a profit. These are investments. For example, let's say it's stock in a company that collapses and goes bankrupt and your stock goes completely away, where you're basically getting rugged. You lost everything. So it wasn't just not yet sold. There is no profit. There is no unrealized gain. If you haven't realized it, it doesn't exist. I know I'm probably preaching to the choir, but it's frustrating. It's annoying to watch communists come after your money. And to watch the U.S. media, which was supposed to be one of the non-governmental checks and balances that guarantee that keep our government honest by the media holding them accountable, and instead they're carrying their water. I mean, this isn't anything new. The media in the United States and most of the world has had a horrible left-wing slant for as long as I can remember, but they've really just turned into a propaganda campaign, propaganda wing of the Kamala campaign, and it's quite disgusting. But the article continues. But these plans, which include the taxation of unrealized capital gains and holdings not yet sold, would face an uphill fight on Capitol Hill, even if Harris wins big. Many of the critiques also vastly overstate how far-reaching they would be. So don't worry, she's proposing it, but Congress will never let her do it. It's an uphill battle. It's not going to happen. And it's not even going to affect you. The article continues. This hasn't stopped many wealthy figures, especially from Trump-friendly ones, from casting these plans as part of a broad-based attack on wealth and the business community from Harris. So the only people who are against it are evil, rich people, especially evil, rich Trump people. And they're casting these plans as a broad-based attack on wealth and the business community, which is exactly what it is. Everything that you've seen come out of the campaign, of the Harris campaign, has been grocery stores are price gouging, and that's why groceries are so expensive. No, it's not monetary debasement. It's not that we doubled the amount of money in circulation. It's not that we collapsed the economy. It's that greedy grocery stores that insist on making 1.5% profit are the real problem. Everything the left is doing right now is attacking business and wealth. And it's to be expected, because they've gotten to the point now where we have a Marxist running for president, and Marxism is all about dividing people into classes. You have the upper class and the lower class, erasing the middle class, and then pitting the lower class against the upper class. So this is classic Marxism. What is different is it's disgusting that what is supposed to be our independent media is carrying water for the Marxists. The article continues its defense of Kamala Harris a little bit later on, stating what triggered this reaction was partly the Harris-Walz campaign endorsement of tax increases in President Biden's most recent budget proposal. That revenue, according to Harris aides, would pay for her opportunity economy, her quote-unquote opportunity economy programs, which include a child tax credit and housing subsidies, and more to come. Again, this is pure Marxist BS. No country has ever taxed itself into prosperity. Governments do not create wealth. They're dangling the carrot of, we're going to pay for your child care. We're going to give you an opportunity economy. That's psychobabble. What is an opportunity economy? It's supposed to sound good. And then, of course, more to come. We're going to give you goodies you don't even know about. All governments do is they steal from people. They take your money and they redistribute it. They use it to award winners and losers, to give it people that they think are fit to have it, to fund programs that they approve of. And they're bad at it. Even if they were completely efficient at it, taking money from one person, having costs, administrative fees, whittles away at that money, so you don't have the full money to redistribute. If a rich person has that money and they buy a Bentley with it, that money goes into the economy. That money boosts GDP. When the government takes it, they spend the vast majority of it on bureaucracy. They lose part of it because they don't even know where the money is. They spend actually most of it paying on interest on the debt for things they've already spent. And then they do an absolutely miserable job of administering the end result. And if you've ever been to the DMV, the post office, or God forbid, a VA administration hospital, a Veterans Administration hospital, you know the government can't do anything right, that they do a horrible job of everything they try to manage. But again, listen to that spin. Opportunity economy programs. What the heck does that even mean? They don't tell you because it's political speak for DEI, for equity. where they make everyone equal by cutting down the successful. In this case, they're going to take money from the rich and give it to the poor. That is the equivalent of saying if you are tall, they're going to chop your legs off so that it makes you the same height as the short people. And voila, everyone is equal. That is what equity means. And that is a word that comes out of Kamala Harris's mouth almost nonstop. This nonsense, most importantly, though, has failed every time it's been tried. Ultimately, it's even destroyed every empire who's tried it. Even though in the United States, in Europe, and every country, you hear apologists for communism, apologists for Marxism that say, oh, well, the Soviet Union wasn't real communism, or oh, China isn't real communism, or oh, real socialism is Norway or Sweden or whatever, and we just haven't done it right yet. Every time it's been tried, it has destroyed the country ultimately who has tried it. But even if you buy all this smoke and mirrors BS, and even if you think communism just hasn't worked because it hasn't been done the right way yet, it's going to be done the right way this time. Even if you ignore all of what Harris is promising to do because you don't think it will affect you, that it will only affect the tippy top of the ultra rich, I want to ask you this. I'm going to posit you this question. How do you think they will know if you were rich enough to meet this unrealized capital gains tax threshold? Are you going to just simply check a box that says, I promise I'm not in the top 1%? They can't just go on what your adjusted gross tax return is, because you have to tally up all your assets to know what that gross return is. They have to know what those assets are. So what's going to happen is, instead of being able to say, don't worry, I'm not rich enough, it's not going to affect me, everyone is going to have to report their assets. They're going to have to report their holdings, to include your Bitcoin holdings. And then, of course, the IRS will decide if your holdings meet their threshold. And they'll do it on the form, but you'll have to tally it up. You'll have to have a schedule where you report all your Bitcoin holdings, all your stocks, all your bonds. And then if you trip the magic number, even if it is really, really only the ultimate rich 1% that have to pay it. The point being, I don't want to live in a country where you have to report how much wealth you have, because anytime the government asks you to register anything, it's always because they're planning on taking it from you. And we've seen this with every other government program that was only supposed to affect the rich. It always works one way or another to where it affects almost everybody. The alternative minimum tax, the $10,000 reporting requirements, capital gains tax in general, the income tax in general was only supposed to affect the rich. But either they lower the threshold repeatedly because they got to tighten their belts in times of economic hardship, in times of austerity, or inflation does the dirty work for them, which is what happened with the $10,000 cap on reporting back when that was first made a requirement with the Bank Secrecy Act. $10,000 would have bought you a house, a nice house. So it was the sort of money that only rich people transacted. You're not going to spend $10,000 at a time. That's just for the ultra rich. And now you can't buy a used Hyundai for $10,000. And it's only getting worse as inflation spirals out of control. But speaking of Kamala, let's get back to Kamala now, and eventually back to Bitcoin, or back to Bitcoin now. Remember the big pivot everyone was talking about after RFK Jr. and Donald Trump promised to be pro-Bitcoin and got such resounding, overwhelming support as a result? Well, obviously jacking up capital gains taxes to 44.6%, not to mention going after unrealized capital gains on Bitcoin holders, should probably be a really big clue that this was total fantasy. But also remember, Kamala is currently vice president of the United States. She's running for president as part of the Kerr administration, one that has completely handed the reins over to her as Biden has just completely disappeared. He's been on vacation since the DNC when Kamala officially became the nominee for president. Well, the Biden-Harris administration continues its full-on assault on the crypto industry. I know this is a Bitcoin show, not a crypto show, but they, quote-unquote, the powers that be, quote-unquote, so to speak, do not make the differentiation between Bitcoin and crypto. To them, it is the same thing. To them, altcoins, DeFi, NFTs, what have you, are simply the lowest hanging fruit, the easiest ones to attack. Bitcoin is decentralized, it's the most robust, so of course they're going to go after the S coins first. You've probably read the headlines, such as Bloomberg's headline just 4 hours ago. NFT marketplace OpenSea gets SEC Wells notice in sign of enforcement action. Or CNBC's report. CNBC's headline, OpenSea receives Wells notice from SEC regulator says NFTs are securities. Crypto marketplace OpenSea has been added to the SEC's list of targets as the regulator extends its crackdown on the sector. Judge them by their words. Incidentally, something that they never said. It was it was randos or surrogates at best that said she was flipping. No, Harris never said she was going to be pro Bitcoin or pro crypto. But as far as her actions are concerned, it's been business as usual. And this crackdown by the SEC is the exact same thing we've seen. It is about S coins, but it is a continuation of Elizabeth Warren's anti-crypto army, of the war on Bitcoin and cryptocurrency by the SEC and the current Biden-Harris administration. Of course, there are those who see this latest SEC crackdown in a positive light. Max Kaiser responded, NFTs are unquestionably securities. Gary is correct. I get it, Max. But the point is, this is part of their war against Bitcoin and crypto that will eventually come to crypto. It reminds me of the quote from German pastor Martin Niemöller. It's the famous quote that says, first they came for the communists, but I was not a communist, so I did not speak out. Then they came for the socialists, but I was not a socialist, so I did not speak out. Then they came for the trade unions, but I was not a trade unionist, so I did not speak out. Then they came for the Jews, but I was not a Jew, so I did not speak out. Then they came for me, and there was no one left to speak out for me. I'm not standing up for NFTs. They're scams. I'm not standing up for altcoins. I believe they're all scams. I am a Bitcoin maxi, but what I am saying is that the current administration that are attacking the crypto community do not make that distinction. This is part of their war on crypto that they lump Bitcoin in with. It's just they're choosing their battles. They're starting with the low-hanging fruit. They want to win some battles. They want some precedences as they continue to get more and more extreme and notch that control down tighter and tighter. And this unrealized capital gains tax, make no mistake, this is not about giving the government more money to spend. There's many reasons for that, but I don't think they care about how many Apple or Tesla or Nvidia stocks you have. This is about you having to report the stocks they can't get, the information they can't get, the assets they can't get information on anywhere else. They can go to these companies and these exchanges and make them tell you who owns what amounts of IBM stock. They cannot force anyone to tell them how much KYC free. I'm getting hungry, I guess. KFC in the United States stands for Kentucky Fried Chicken, in case you don't know that. KYC Bitcoin. The only way to know how much KYC Bitcoin people have, who has it, that is to make them report it. And that is what the unrealized capital gains tax is all about. Real quick, I want to fucking shake this off. Pardon my French. I'm going to have to bleep that later, because this is not a doomer podcast. I'm not trying to be a doomer. I believe the then they fight you stage has always been inevitable, but I also believe that we have an option in the United States to at least put a dent in it, if not bring it to an early end in November, by not electing Elizabeth Warren and Kamala Harris into power, by voting for the Donald Trump, RFK Jr., Elon Musk administration. One last thought before we wrap up the news section. Many have a short memory, but there was a time when we were told there would not be a new all-time high. There wouldn't be a new halving cycle. There would be a halving, but there would be no pump. This cycle would be different because Bitcoin was benefiting from a liquidity spike. Remember that? All that free money? That with rates through the roof, investors would be turning away from Bitcoin, and that Bitcoin couldn't function in a high interest rate environment. Safety in a Moose, it's good to see him make this comment, because he has been so involved in posting about what's going on in the Middle East, and it's important to him. It's near and dear to him, but I follow him for his takes on Bitcoin. Most of you know of him because of the Bitcoin Standard, not because of his politics about what's going on in the Middle East. So it's nice to see him tweeting about Bitcoin again. And he tweeted out Sunday, the Fed started raising rates on March 16th, 2022, and just announced it will start lowering them. During this hike, Bitcoin's price went from $42,000 to $64,000, a 52% rise. My condolences to all the Bitcoin haters who said Bitcoin was a low interest rate phenomenon. So I don't know how many of you have been around long enough to remember that Bitcoin had never survived bad economic times. That Bitcoin had never survived high interest rates, and that was going to be the death knell for Bitcoin. And clearly, as Safedine is pointing out, that did not happen. All right, on to what makes today and every Wednesday special, and that is that today is DCA Wednesday. What is DCA, you might ask? Well, DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this will be our 160-second stack. We started all the way back on Wednesday, July 28th, 2021, between those double tops of the Elon Musk Tesla pump and then the ultimate cycle all-time high that we spoke about a few minutes ago. And so far, we have stacked 161 times, converting a total of $3,220 into a stack of 9,773,044 Satoshis. And we've done so at an average cost now of $32,947.77. And to make today's stack as usual, we're going to once again be using the handy dandy Cash App. Cash App is not a sponsor of this show. I just think they're one of the easiest ways to stack small amounts of Bitcoin. I would not be using Cash App if I was stacking larger amounts because they do charge a slightly higher fee. But when you're stacking smaller amounts, they do one thing that no other service I use does, and that's that they will let me transfer the Bitcoin to my cold storage without charging me a mining fee. And so if I transferred Bitcoin from Coinbase, for example, and they charge me $3 or $4 in mining fees, that at least offsets, if not completely makes up for the 45 cents in fees that we accrue every time we buy $20 of the Bitcoin on Cash App. Again, not a sponsor of the show. There is, however, a referral code in the show notes. If you decide that Cash App is a service you want to use, you're not already using it, please scroll through the notes until you get to the referral codes. Click on the Cash App referral code link and sign up using that link. If you do, you'll get $5 free just for signing up and using Cash App. And the podcast will receive $5 as well, which we will immediately turn into Satoshis. So you will not only get paid for helping support the podcast, but you'll be getting something that you won't get if you just sign up without using a referral code. So I already have Cash App open and I already have money in there because I've been buying the MFD. And so it's simply just a matter of tapping Bitcoin, tapping buy, entering $20, tapping confirm, and boom, just like that, we purchased another 33,178 sats. Bitcoin dropped a tiny bit while I've been talking, so we purchased at a price of $58,925. That may seem like we're buying Bitcoin on the cheap, but you only have to go back 2 weeks, and we purchased cheaper at $58,888. And then the week before that, on August 7th, we purchased at $55,869. So even though the normies think the price of Bitcoin is down, and it is down over the last few days, when you zoom out and look at just DCA Wednesday purchases, Bitcoin continues that inevitable march up and to the right. And that stack of 33,178 sats brings our total stack to 9,806,222 Satoshis. It also raises our average purchase price by about $90, so our average cost basis is now over $33,000, coming in at $33,040.25. Still not too shabby, even with Bitcoin clocking in a little bit lower at $58,925. To put that into perspective, we have now stacked a measly $3,240. I say measly, that's a lot of money, but it's not a lot compared to a lot of people. And it's not a lot considering that one day we've got a stack of Bitcoin that's going to put us in the, in the upper echelons of financially of the world population, because there's only 21 million Bitcoin out there. And if everyone on earth was trying to stack it, there's not even enough for, every millionaire to have one whole Bitcoin. And the average person would be lucky to receive 150 to 200,000 Satoshis to stack that many one day. So 9.8 million sats is, we're going to be sitting really pretty if when hyper-Bitcoinization comes along. But again, to put that into perspective, if Bitcoin just goes to 100,000 this cycle, which I think is a low ball by any stretch of the imagination, but if Bitcoin just hits 100,000, our stack of sats will be worth $9,806.22. When Bitcoin eventually goes to 1 million, even if we don't add another single sat to our stack would have a value of $98,062.20, which is significantly more money than the average person in the United States has in their savings. And the United States being one of the richest countries in the world, that is obviously significantly more than the average human in other countries throughout the world could ever hope to have in their savings. And then at ultimate hyper Bitcoinization, when, for example, Fidelity, I talk about this, Fidelity's director of global macro predicted that by 2038, Bitcoin will hit $1 billion. And who knows if that happens. But one day, if Bitcoin becomes the global reserve currency, it is not unquestionable that Bitcoin will hit a $1 billion per Bitcoin price tag. If that is the case, without buying another Satoshi, without converting another stinky US fiat dollar into sats, our current stack would have a US dollar value of $98,062,200. And that's the sort of thing I'm talking about when I say that we are early, that we have the opportunity to stack more Satoshis than the average human will ever have when they finally realize that they have no choice, that Bitcoin is the lifeboat. Bitcoin is the escape hatch. When we not even achieve hyper Bitcoinization, but when people start to progress more closely towards hyper Bitcoinization, just when Bitcoin becomes digital gold, that's 14x from now, which will put Bitcoin out of reach of that many more people. The fact that if you've been stacking with us every Wednesday and you've only been converting 20 US dollars, that you could have a stack that would put you firmly in the wealthiest 10% of the global population is just truly, truly humbling when you look at it in those perspective. All right, before I go, I want to ask you to help support the podcast. Of course, you can do that through the Podcasting 2.0 method, where you can stream us sats while you're listening, or send us that Bitcoin boost and let us know what you think about the podcast and contribute a little bit of value back to the podcast for the value that we are giving you every week when we go on the air. But more importantly, I'm talking about helping feed that algorithm monster, helping boost the our visibility on Twitter, for example. And you can do that by following us on Twitter. On Twitter, the podcast handle is at BTC Bulletin Pod. Again, Twitter or X is at BTC Bulletin Pod. By following us, it will be more likely that more people that you follow will see our tweets, and maybe you'll help orange pill somebody. And of course, by rating or reviewing this podcast or going back and listening to old podcasts also helps feed that algorithm monster. And then more people are likely to see this podcast pop up in their podcast feed, and you can help us orange pill some new plebs that way. But mainly, I just want to hear from you. So, Satoshis are getting expensive. You don't have to send Satoshis. You don't have to contribute value back through the value for value model. You can contact me by DMing me on Twitter, again, at BTC Bulletin Pod, or just sending me a good old-fashioned email. The email being bitcoinbulletin@protonmail.com. Again, that's bitcoinbulletin@protonmail.com. All of this is also in the show notes, because the reason why I do this, again, I mentioned this isn't a job for me. I don't have any sponsors. I'm not really making anything financially from this podcast. I just love doing it, and I love doing it because I want to help orange pill plebs. And so I'd like to know what you think about the podcast. Are you enjoying the podcast? Are you disgusted by the podcast? Or is there something you'd like to see me talk about? Do you have any questions about anything I said or maybe accidentally missaid? Reach out and let me know. Again, DM me at BTC Bulletin Pod on Twitter, or email me at bitcoinbulletin@protonmail.com. But either way, don't forget to join us next Wednesday and every Wednesday while we're going to continue to grow that stack, as long as people are willing to send us Bitcoin in exchange for, paper money that the government can print at will. But until that time, keep on stacking those sats, you sexy sat stackers.